Good morning, everybody. Hey, welcome to Tuesday, October 29th, as we count down the days of October. Hey, I want to thank you for joining us today. We got a lot of earnings reports coming in that we want to talk about, and so we'll get started with that in just a moment.
Much time going through what's going to happen that we end up running short on time. It's time to check in on your money, and we are going to do such because it's earnings season and it's raining earnings right now on the Mall Street. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler is here. Good morning, Phillip. How are you?
Hey, good morning, Dave. Doing well today as we start this Tuesday morning after hitting record highs close yesterday. Amazing how this market just keeps going up.
That's just amazing. Yeah, the NASDAQ closed at a record. Standard & Poor's closed at a record, all-time highs. The Dow is not far away, but it's got a few hundred points to go before it manages to beat its all-time record. Boy, what a recession we're having, huh?
Yeah, exactly. It's these earnings just keep adding to it. It's going to be interesting as we start to see some economic news later this week and next week, how that starts to impact the markets.
Yeah, it kind of makes the Federal Reserve meeting kind of interesting, because if they react and lower interest rates, as some of the pundits are saying, that's going to sound like a message to the markets. They know something we don't. Might be one of those times where a stimulative interest rate decrease might have a bad effect on the market this time around.
Well, you're right. That's possible because they're looking ahead and trying to determine how best to accommodate our economy. And so if they're cutting interest rates, then they're obviously seeing something down the road that the market's not seeing.
Now, I don't think I'd really want to be in Paulson's seat right now, because he can't win. If he doesn't say anything about the possibility of lowering interest rates, interest-sensitive stocks are going to tank. If they do, they're going to be sending a message about the economy. Like you said, do they know something we don't? And that's not going to be good. That's one of those times you really don't want that job regardless of pay grade, right?
Well, yeah, you and I, we don't want that job no matter what.
Yeah, point taken. We had the big news, a couple of really big stocks, but the thing that caught both of our eyes off the news ticker this morning is not a big stock, but kind of a novel business category. How'd you like some fake meat? Evidently some people do, right?
You're right. Beyond Meat had a great quarter. They really surprised Wall Street. They reported 6 cents a share, which is double what Wall Street expected them to do on earnings. Revenue came in above analyst expectations. They really had a great quarter heading forward. Now, I know you're going to ask me why,
I'm good
right?
at.
Yeah. What are you
Yeah.
going to ask me?
Well, what's going on? Why don't people like soy burgers even when they are making money?
Well, they're dropping like flies on the stock price today because of a couple things.
Okay.
One, Beyond Meats came out in their earnings report and said, look, there's growing competition in this whole space of non-existing meat. So what they're doing is they're going to have to discount deals because of growing competition. And I think that's partly to do with the decline in Beyond Meats. But I think the bigger thing that happens tomorrow, Dave,
Mm-hmm.
is that it was an IPO, and when you have an IPO, a lot of the closely held stock gets locked up. People can't sell it. They're given that stock as part of their compensation in deals. They can't sell it. Well, tomorrow it's unlocked. 75% of the stock of Beyond Meats becomes unlocked tomorrow, meaning it can be sold. So
And we create a few new millionaires, but we tank the stock for a few days.
well, right, because those people that are out there that can sell it look at that and saying, okay, I need to sell today before everybody else can sell tomorrow who wants to get some money out of this deal. And so I think that may be more of what's driving the stock price today than the actual analysts, looking at, hey, we're going to have to start discounting our prices in the future. So they're down almost 19% this morning.
Wow, and that probably makes some sense, more than the actual quality of the product or the increased competition. Fake meat has gone a long way. Back when I was in college, the agriculture school up at the University of Wisconsin was experimenting with soybean burgers in the dorm. It was kind of like eating meat-flavored Jell-O at the time. They've really improved that a lot over the years, haven't they?
Yeah, I think they have. You know, it has become better. Though I've had people that have eaten some of that stuff at some of the restaurants and say, look, if you're a meat person, it still doesn't live up to meat.
Enough said, but it's a category worth watching at the very least. Talking about brands that we've actually heard of and probably care more about, the parent of Google reported one of the glamour companies supposed to be making money hand over fist every time. Can you say oops with a dollar sign in front of it?
Well, you know, I put this kind of in the category with Amazon, right? What do we see? Amazon had a miss. Alphabet, which is the parent of Google, had a miss. And their miss was pretty substantial, you know, almost 20% on the bottom line. They were expected to come in at like $12.42 a share, and they only got $10.12 a share. So a pretty big miss. Their revenue, though, was slightly above what the street had forecasted. So some good things there when it comes to the gross revenue side. You know, they had some you know, higher expenses in some of their cloud computing space and some of those things that hurt them. So, I mean, they're trading down a little bit today, Dave, not a whole lot, about, you know, 0.8%, but it's still pretty close to their 52-week high. And so, you know, we'll have to continue to keep an eye on Alphabet.
I didn't see the actual numbers for the P&L report from them, but I found it interesting on my ticker. The big brokerage houses after the report, they're still moving Alphabet's target price upwards. So they're kind of seeing this as a one-quarter glitch one way or the other.
Well, I think so, and they're really, I mean, they're still very close to their 52-week high. I mean, 52-week high was basically pennies short of $1,300 a share, and they're expected to open right now at $1,278 a share. High price stock.
First world problem to have there, right?
Exactly.
Among the other things, just kind of turning the corner, we don't have the specifics on it, but General Motors reported, and they had a pretty good sized beat just in order to add to the smokestack versus internet revenue side. The smokestack industries are evidently doing pretty well. Talking about other companies that had some hard times over the last couple of quarters, I understand Pfizer had a decent quarter, huh?
Yeah, they did. Both the drug companies that reported today had a pretty good a quarter. We had Pfizer and Merck report. Pfizer beat by 13 cents a share, came in at 75 cents a share profit. Revenue was above the projections as well, and so they raised their full year forecast too, which is always a good thing to see. They're trading up 3% this morning, followed by Merck, who also beat by about 20 something cents a share. Revenue was above forecast for them also. They raised their full year guidance. Things are working well in the pharmaceutical companies, it looks like, and they're up, getting close to 3% now.
Cool. Sounds like a good update so far. Another company that kind of surprised me because they've been under a lot of competitive pressure. You mentioned that Xerox reported, and they're kind of a dinosaur in the tech industry. The inventor of the photocopier and all of that thought Xerox was a thing of the past. Maybe not, huh?
Well, they're still out there pushing copiers and printers, and office automation is kind of where they can continue to morph into. And so they beat substantially too. They came in at $1.08 a share. They were expected to come in at 86 cents a share. So great thing there. Revenue was slightly above what was forecasted. But again, another company raising their full year guidance. And so that's been a good thing for them. They're up substantially this morning, up 5.5%.
Not bad at all. I'd mentioned General Motors at the factory level having an unexpectedly good quarter. Evidently, the sales may translate into that too, maybe. AutoNation's one of the big publicly traded dealers. How'd they do?
Well, they did okay too. They beat on both revenue and earnings per share, and so they were helped not so much in the sale of vehicles, which that always helps, but you know, financial services. So you know, financing those vehicles actually help their bottom line as we head forward, and they're up about 1.4% this morning. Actually, they're
Cool.
really close to a 52-week high.
Cool beans. That's a bunch of other little ones that I knew that we've just got sketchy information on. Kellogg, a little bit of a recovery. They actually sold some cornflakes. They had a beat. MasterCard showed up as a beat. BP evidently swung to a loss, so we've got a checkered picture so far, but mostly a solid day. Any other indications you got from the earnings reports we saw in specifics?
Well, I don't have the actual stock price, but HCA, which is Hospital Corporation of America here, we've got their local hospital here.
Mm-hmm.
They came out. I'm trying to find where it went to, and I want to think they missed. I'm sorry. I had it right here and it disappeared. They've raised their full year guidance a
Mm-hmm.
little bit, and their stock's up about 4% right now.
That's not a bad place to be. Setting the table for the morning, like we mentioned at the top of this, it was a big day yesterday. Dow's not at a record, but it went up to 130. It went up 132 points yesterday. Nasdaq did set a new record by gaining 82.5. Standard & Poor's new record up 16.87. All green ink yesterday, and some records set. I got to assume there's going to be a little bit of profit taking going in along with these reports this morning. 45 minutes before we open, Phillip, what are we doing?
Well, it's kind of a mixed bag this morning, Dave. We do have a little red ink on the Dow and the S&P 500. Not enough to really, make a whole headwind. I mean, the Dow's down less than $50. The S&P 500 is down less than 2. And we got the Nasdaq actually a little bit green, up about 0.1% this morning. So a little bit of a mixed bag there. And then we look at gold and silver, both trading down. Gold's down about 1/3%, down to $14.91 an ounce. And then, $1,491 an ounce. I'll get that right. Silver is down almost 1% to $17.71 an ounce.
Now we got crude oil sitting at 55.02, which kind of keeps us in a trading range that we like to see. It's not skyrocketing.
No, it's actually going down, and my direct quotes got it down a little bit more than that, Dave, at 54.90.
There, mine just switched too. I'm just a little slower than you are this morning. World markets, mixed bag overseas at the moment. Asia was mixed with Japan up and the Chinese markets down early this morning at their close. Europe generally off a little bit this morning. I think there's something going on with the British Brexit negotiations that they don't like over there because they got red ink in both Great Britain and Germany. Phillip, somebody need advice to be able to make money off of the good times, but even more importantly, insure oneself against the hard times. How do I get an appointment for that advice from you?
Dave, when the markets hit record highs, what do you need to do? You need to take inventory of your portfolio to make sure you don't have too much risk. Call us right now to schedule your no obligation portfolio analysis to make sure you don't have too much risk in your portfolio. Call 382-0037. And then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty. And back here tomorrow morning on Light FM at the same time. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man. You have a great one.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Have you done your homework?
Hey, folks, I want to thank you again for joining us today. I hope you got a little piece of information that's useful for you as we head into this last week of October. Have a great day. I look forward to speaking to you again tomorrow. Bye now.